Hey, good morning. This is Mayor Valensky with Driving Markets. Driving while talking about markets. Anything said in this piece, as I say all along, is only an opinion. It's an overall view. It's not financial advice, not investment advice. If you make money from any of the comments made on this particular, opinions made in particular piece, great. If you lose money, then I'm sorry, but that's not the idea. Is just give you an overall view of financial markets. Okay, so let's kick off. So yesterday, the big event yesterday was PPI, the Producer Price Index, which came in less than expected. It was expected a 0.4% increase in the States, came in at 0.2%, and that sent equity markets flying, and the dollar was hammered as those numbers came out. Now, the Producer Price Index is another inflationary indicator. Okay, so you had last week the CPI, Consumer Price Index, that came in lower than expected. Now you've got the Producer Price Index, excluding food and energy, came in lower than expected. So the food and energy sector actually, or the numbers there were up, but the overall Producer Price Index, the end goods, came in at much lower, and that pushed up, as I said, equity markets. In fact, the Dow went above 34,000 at one particular stage and then was sold off dramatically and only closed up 56 points. The Nasdaq did well. That was up over 150 points, 160 points, on the back of lower expectations of interest rates. Is good for the Nasdaq because they're totally dependent, the high-tech sector is totally dependent on funding and cheap money in order to keep the oil in the engine moving as far as the high-tech sector is concerned. So all the high-techs went up, all the FAMs, the FAAMGs, the Facebooks, the Apples, the Amazons, the Googles, etc., Microsoft, all went up yesterday. Obviously the high-tech sector benefited dramatically from that. I do believe the whole thing is going to be short-lived. I can't really see there is enough drive within the marketplace to push the indices to all-time highs. There is an interest in Wall Street traders to push it higher, obviously, because they've been caught with their pants down at the beginning of the year when they were all long of stock, and as a result of that, all that stock has tumbled dramatically. Moving on to a couple of points, Walmart came out with much better than expected numbers yesterday. That sent up the retail sector. Remember, Walmart is a retail outlet, it's not online, and therefore it's called a bricks and mortar retail seller, and they had pretty good results, and that sent up also Home Depot and Target and a few other retailers within the US, hoping that the retail sector is going to bounce back and be a indicator that the economy is doing well. Also, as far as Home Depot is concerned, they also reported good results. Again, Home Depot deals with home improvements, and home improvements in the States is still very, very strong. It looks like that's where the money is going into. Moving on to, I'll come back to that in a second, but moving on to the crypto, Michael Barr, who's the vice chair of the supervisory committee in the States of the regulator, is calling for much stronger regulation on cryptocurrencies after the FTX debacle, where Sam Bankman-Fried has just lost $30 or $32 billion. It's really elementary to irrelevant whether it's 30 or 32 billion, but that FTX went down. Now, Binance came out with an interesting one. They said they want to set up a fund to support platforms that are in danger. Well, where's that fund going to come from, and who's going to set up a fund to support cryptocurrency platforms that are in danger? In other words, you're looking to give them first aid to these cryptocurrency platforms, and they shouldn't be there in the first place due to their bad management and due to their bad foresight and handling of cryptocurrencies. Those platforms need to go bust. It's quite simple. They're incapable of running a business, and therefore they shouldn't be bailed out. But if Binance want to set up a fund, and there's plenty of people that want to invest in that fund, then good luck on you. Go, if you want to invest in that fund, then go ahead. It looks like I'm going to have an accident here if I'm not careful, because the whole road's been blocked. Okay, so that's as far as FTX. There'll probably be more regulation coming in from the States regarding cryptos to try and protect the investor and protect the trader and make sure that money is more secure. So that's something that was very, very interesting. As regards the dollar tanked yesterday on the back of PPI numbers coming out. Look at cable. Remember I said in the morning that cable, which is the pound dollar, looked like a buy. Looks like it was going to approach the 120 level. And it did get to 119.75. I didn't quite see if it ticked up to 120, but it looks like it's on a bit of a run upwards, and cable could be seen going to 121, 122 in the near future. I'm talking specifically cable, because cable could have some strength, especially if the budget or the mini budget in the UK on the 17th of November comes out strong, which is tomorrow effectively. So if Germany can give confidence to financial markets that he is under control and is going to cut back on public spending and probably increase taxes, then that should send the pound up a little bit higher. Gold is sort of ran up yesterday, came off slightly. It's still on the uptrend towards the 1800 level. I would expect it at 1800, then from there struggle as to where it's going to go. I think it's probably going to, in my opinion, I think it's going to hit the 1800. All depends on the dollar, to be fair, but it's going to hit the 1800, 1810 level, and then probably come all the way back to 1750, 1740s. Those who are gold traders, keep an eye on that. Now, interestingly enough, tin has been hammered this year by about 61% down, but it's reached its bottom and started bouncing. Now, tin is used economically across the board on all industries. Across the board, it's a massive economic metal. It's a base metal that's used across the board. And that jumped up yesterday, and there could be an indicator that if there is a demand on tin, then that could be a bullish indicator that the economy could be pulling out of the doldrums and moving forward. So keep an eye on tin. I know it's not spoken about many times and lots of people just don't understand it, but it is an economic base metal, and it has gone all the way down by about 61% this year, and it could be an indicator of where we're going to go in the future. As far as China's concerned, there's more lockdowns there, there's different COVID, so every day with China it's opening, closing, it's impossible to keep track of it, but at the moment there's more lockdowns. Oil did jump, went negative yesterday and then closed up a little bit, so it's hovering around the 91, 92 level, and I expect it to creep up to the $100 level over the winter period, especially the November, December, January, February periods. Expect oil to creep up there. That's more or less it. Bonds came off slightly yesterday, which was good for the Nasdaq. We've already discussed that earlier on. Thank you for your comments and thank you for subscribing. If you have any questions, anything you would like to mention, then go ahead. Just one last point, which I mustn't forget, is as far as Meta's concerned, or Facebook, they're going down, and so is Bitcoin. I keep saying that all the time. I just want to emphasize it on a daily basis. Okay? This is Meir Walensky with Driving Markets. Subscribe, comment, check out my Instagram. Speak to you soon.